Hey folks, time for the rate update. Today is September 17th, 2021. Federal Reserve's got some issues on their hand. We're going to talk about that and how the markets reacted today. So don't go away. We'll be right back. Okay, so the Federal Reserve might be getting in a little hot water. We have CNBC reporter Steve Leisman right here telling us about it. Then when we come back, I'm going to show you how the markets jolted because of this. So don't go away. Take it away, Steve.
Now, sticking with market moves, several Fed presidents are facing scrutiny after disclosing a number of large investments in stock trades over the past year. Steve Leisman is here with those details and the fallout. Steve?
Kelly, thanks. Amid an outcry about Fed officials owning and trading individual securities, an in-depth look by CNBC at Fed officials' own financial disclosures finds 3 who last year held assets of the same type the Fed itself was buying. Boston Fed President Eric Rosengren held several $100,000 worth of real estate investment trusts that owned mortgage-backed securities. He made 37 separate trades during 2020. The Fed last year purchased almost $700 billion in MBS. Rosengren announced last week he would sell these positions and stop trading while president. Dallas Fed President Robert Kaplan, he actively traded millions of dollars of individual stocks. He said he would take the same action as Rosengren. A spokesperson for Rosengren telling CNBC that he, quote, made sure his personal savings and investment transactions complied with what was permissible under Fed ethics rules. Fed Chair Jay Powell held between $1.25 and $2.5 million of muni bonds. The bonds were purchased no later than 2019 and are just a small part of his overall portfolio. They were held, however, while the Fed last year bought $21 billion in munis. A Fed spokesperson telling CNBC that Powell had no say over the Fed's individual bond purchases and no say over the investments in his family's trust. A Fed ethics officer determined that these holdings did not violate Fed ethics rules. Richmond Fed President Thomas Barkin, he held 1.3 to 3 million in individual corporate bonds purchased prior to 2020. He held these bonds while the Fed last year bought 46.5 billion of corporate bonds. Barkin declined to comment. He had no say, however, over individual bond purchases by the Fed. These holdings or trades do not appear to be barred by Fed ethics rules, but they raise the question: should those rules have banned officials from holding or trading the same assets the Fed bought after it widened those types of assets it would purchase in response to the pandemic? The Fed's own code of conduct says officials should be, quote, careful to avoid any dealings or other conduct that might convey even an appearance of conflict between their personal interests, the interests of the system, and the public interest, Kelly.
Which is a pretty broad statement. So were the actions against the rules or not?
They don't appear to be against the rules, or at least the letter of the law. But Dennis Kelleher, CEO of the nonprofit Better Markets, tells CNBC that if such Fed actions are not against the rules, well, the rules ought to change. Quote, to think that such trading is acceptable because it's supposedly allowed by the Fed's current policies only highlights that the Fed policies are woefully deficient. And as you know, Kelly, in response to CNBC questions, a Fed spokesperson released a statement yesterday saying Fed Chair Jay Powell ordered a review last week of the Fed's rules surrounding, quote, permissible financial holdings by senior Fed officials.
Okay, so what they're doing isn't illegal, I guess. If you and I did it, we'd probably be in prison for several years and have to pay all the money back, plus interest, plus penalties, plus. But that's just how it works. So based on that, and there's other things in China going on and all throughout the world that's really playing havoc on the markets right now. The Dow Jones is down. The mortgage-backed securities are dropping in price, driving up the yields. So here's what I'm going to do. I'm just posting a video today on regards to rates, how the MBS markets are reacting to some of this news. Next week, I'm going to start new features. Monday through Friday, I will post rate updates. On Tuesdays and Thursdays, I'm going to go in depth with more content, meaning next Tuesday, we're going to go over down payment assistance programs that we offer. We offer state-specific ones, and then we offer broad ones that are all over the country that we can help you guys with the down payment if you don't have it. And then on Thursday, we're going to go over VA. When is a good time to take a VA loan? And if you're a veteran, when would you not do that? So we're going to talk about that next Thursday. But right now, I want to just go over the headlines and how the MBS market is reacting to everything today. So the headlines right now is Federal Chairman Chief Powell and officials own securities that central bank bought during COVID pandemic. Steve just went over a great information about that. I don't know if you guys realize too that Congress and your senators and so forth, they can technically kind of in a quasi way actually do insider trading, and it's legal. You know, they can make decisions on, for example, what Facebook is doing while they're owning Facebook. And same thing with Google and all this other stuff. You know, if they're working on trying to push an agenda for, say, medication, they might want to reach out and try to buy some drug companies that might be publishing or issuing those drugs. So just letting you guys know that part of it. So is the system manipulated? Maybe a little bit. So the next headlines are White House warns of economic catastrophe without the action of a debt ceiling. If you follow the news every day, that they're pumping out more and more and more free money to people, and they're extending this and they're giving monies to families and all this other stuff. I am purely a component of helping people when they're down, but we don't have to have life support for everybody for their entire life from early ages to the rest of their lives. These are my opinions, guys. I hope you appreciate my opinions. That's what I'm saying. Have I hit bottom in my life? Absolutely. But I wasn't seeking assistance for the rest of my life. So I just want to be transparent on that end. So there's a lot of things that the government does do that I completely appreciate, but there's a lot of money just being wasted. And just kind of, I'll say it, bribery so you vote for them. So that's that. So between the debt ceiling, the catastrophic information that's coming, and the way that they manage their money is just completely crazy. Between that and Federal Chairman Powell's issues now, and then there's a run on several real estate investment firms in China, it's playing a havoc on the market, guys. But like I said yesterday, I am anticipating a correction here, or back to a little bit normalcy. This is too big of a crash in just a couple days. We saw this back here back in early August, when really the fear of tapering from the Fed came in, and then a bunch of other things. Okay, so that really took the market from, let's say, a 102.2 to a 100.8. That's a huge move. These are the numbers over here. Basically, all I want you to be concerned with is the number. You know, what's going on? Is it up and down? And kind of where are we? Okay, so how this works is we monitor this. People follow me on a daily basis. They want to figure out what's going on with mortgage rates. Okay, that's the primary point of our channel, to educate you guys on rates and how that could affect, maybe help you, where rates are today. Would it make sense to refinance? Get an idea where mortgage rates are, so when you call us, you at least have an idea, just to educational purposes, and then also teach you in regards to what kind of programs are available. Is VA a good loan? Some people hate FHA, don't know why, but do you know the facts behind it? The biggest concern is reverse mortgages. I always tell people before I talk to them, don't hang up on me as soon as I say the word reverse mortgage, because I bet you don't know really anything about reverse mortgages. And if you do, it's completely bad news. So that's the point of the channel. But let's get on to this. MBSs are down 12. What happens when the mortgage-backed security price, which is the one we watch, goes down? Mortgage rates go up. Okay, so we hate that. Look at this. Okay, it's an overreaction, guys. There shouldn't be the reason why we're trading on this, unless the Fed came out and said, guys, we're going to start tapering. We're going to start increasing rates. That's when I expect this. As soon as they announce it officially and a time frame, we're going to probably see this. So I'm trying to prep everybody to say, guys, this is a good time. Stability right now. I only anticipate rates going up. Okay, being stagnant or up. I expect us to be trading right in this range right here, okay? And we're down here. So I'm proposing a rally next week. By midweek, we should be back into these ranges. I am not locking people still, okay? If this doesn't happen, anybody that's locked, and we promised you those rates, we will honor those. Any new applications, you're going to get new rates, guys. So if you like the rates now, I quoted a few quotes yesterday. We were beating their mortgage rates and their competitors. I haven't heard from some people. So don't sit on the sideline, because, guys, rates move every day, and they can move throughout the day. So that's the pattern that we see over the last quarter. What do we see over intraday? So what did today alone bring us? So here's where we are. We came out of the gate, plummeted. Okay, and then I came out, and where I'm coming out now saying I see a recovery. Look at right here. Look at the trading that we had basically from noon to now. It's nothing but green and up. So there's an overreaction. I wouldn't be surprised if we ended the day back to zero. Okay, back to this number being zero. So that's where we are intraday. So the next thing is, let's look at the economic calendar today. Is there anything there that should have affected the markets in this way? Nope. Consumer sentiment. The Fed doesn't care about that. Okay. Basically, what they're looking at is they have some issues, and also our government and the economy is having issues. Okay. So that's where we're going with today's report. I don't have today's Black Knight mortgage rates, but on Fridays, they only issue the Wednesday rates. So where we were on Wednesday is basically exactly where Black Knight would be. So Monday, I will be reposting and updating you guys on rates. Talking about rates, I need you to go to my website, therateupdate.com. You're going to click there. Let's see what happens here in about 10 seconds. It should pop up, and we will wait. 10, 9, 8, 7, 6, and there it is. Look at the new feature we have. So let's say, rates just aren't where you were, or where you're looking for or need. Guys, be realistic when you do this though. If you're looking for a rate, we'll help you track that rate. How you do it is just click here, enter your rate now. You're going to click there. You're going to put in the rate you're looking for. Please don't put a 30-year fix at 199, but let's say you're looking for 299, and we just didn't have it today. So you're going to put in 299. You're going to go to the next step. I need to know a little bit about you. Okay. We're not going to call you and hound you and pressure you and anything, but these are the criteria that I need to set up your rate watch. The reason being is we ask the loan amount and your property value. Why? Because your loan to value means the loan amount divided by your property value is one key element to your mortgage rate. The next thing is, what is your credit score? Goes all the way down to a 579 because we need a 580 to qualify you for FHA. So it gives us that. Purpose of the loan. Are you looking for a purchase, refinance, or are you looking to cash out? If you click refinance, that means you're just looking to pay off your mortgage, nothing else. If you need money to fix up the house or do some credit consolidations or whatever, you pick cash out. Then it asks you the term that you're looking for, okay? And then it tells, you tell me where you are, and then give me your information. What we're going to do is we're going to internally in our rate pricing engine, we call it pricing engine. That's how we figure out what interest rate you're going to get. We're going to put your data in there, and then you and me, will be notified if and when that rate hits your preferred target rate. So this is just one of the features that we're adding on a daily basis to the mortgage website that we have. So that's it for today. I'll let you guys go because it's Friday, TGIF. We had a great week. Hope you guys did too. Please don't forget to subscribe. Give me a thumbs up. Subscribe down below. Hit the bell every time I post a video. You get an alert. God bless, guys. I will see you next week. Take care. Bye-bye.